What should people do to prepare financially for a divorce?
The first thing I would do if I thought my marriage was in trouble or it was not going well is I would find out what I've got. So many people come in here and they do not know what their assets are. They don't know what their debts are. I am stunned, Raina, at the number of people who come in here and cannot tell me what their spouse earns.
Really?
It is surprising to me. And maybe that's why the marriage isn't working out, because they're not communicating. So I think the first thing I would do is, if I did not know what my house was worth or what I owed on my house, I would find out. I would get the mortgage statement. I would go to Zillow, put my address in, and get a broad idea of what my house is worth.
Welcome to another episode of Best of Johnston County, brought to you by Breeden Law Office. Our host, Jonathan Breeden, an experienced family lawyer with a deep connection to the community, is ready to take you on a journey through the area that he has called home for over 20 years. Whether it's a deep dive into the love locals have for the county or unraveling the complexities of family law, Best of Johnston County presents an authentic slice of this unique community.
Hello, and welcome to another episode of the Best of Johnston County podcast. I'm your host, Jonathan Breeden, and today we're going to have a special edition episode of the Best of Johnston County podcast that we call Ask Jonathan Breeden Anything. Normally, our podcasts are me, Jonathan Breeden, interviewing interesting community members, small business owners, community leaders, and other people that we find just fascinating and interesting that are doing great things here in Johnston County. And every once in a while, we do one of these episodes where we call it Ask Jonathan Breeden Anything, where our social media coordinator, Raina Birch, asks me a series of questions as it usually relates to family law. I don't know what the questions are in advance, but I probably know the answers since I've been practicing family law here in Johnston County for the last 24 years. If this is your first time listening or seeing the Best of Johnston County podcast, please do us a favor of liking, following, or subscribing to this podcast wherever you're seeing it on Apple Podcasts, Spotify, YouTube, LinkedIn, TikTok, or any of our other social media channels, and also going down to wherever you're receiving this podcast and leaving us a 5-star review, as that will help with our visibility so more people will know about the Best of Johnston County podcast. So anyway, you ready, Raina?
I'm ready. Are you ready?
I'm ready.
Okay. So first question, what is all included in the marital estate?
What is all included in the marital estate? It is everything that the marriage amassed, both assets and debts. And I think a lot of people, they come in and they know I got a house or whatever, and they don't really realize that it's the debts too. And unfortunately, a lot of people come in and the debts are more than the assets. And when the court goes in to start trying to divide the marital assets, whatever the marital, the estate's when you die, right? But so we use that term.
Yeah.
But the marital assets, people are often shocked when we're like, we got to divide the debt too, because particularly if you're a lesser earning spouse or in the relationship, oftentimes you may not be aware of how much debt there is, and you benefited from the debt almost always. And now we're like, okay, well, you have $50,000 in credit card debt, and as part of this income distribution, this property distribution, you're going to have to absorb $25,000 of credit card debt, and they might not make $25,000. And they're stunned, but it is both assets and debts that were amassed during the marriage. Now, not included in marital assets are things that were inherited, or unless you've made a gift to the marriage, and that probably a whole nother podcast, or could be. I mean, because basically, if you inherit it, and you put it in a joint account, or you pledge whatever you inherited for a joint debt, then the inheritance can become marital because you've commingled it with the marital assets. But other than that, its inheritances are not marital. Things you came into the marriage with are not marital. So if you came in with $100,000 in a 401k, and when you're divorcing, there's $200,000 in a 401k. Well, the first $100,000 and whatever that growth is from the $100,000 you had when you got married remains a separate property of the person who brought it into the marriage, as do the debts. You come into the marriage with a bunch of debt, people do that too. Now the question is, has it been paid off? A new debt been put on top of it? with this revolving credit card debt, it gets to be a little more confusing.
Yeah.
But it's essentially whatever this marriage, and a marriage is a social contract created by the government, to contract people together. And when you get divorced, it's basically this small business. And I'm married, I'm happily married, but I'm saying legally
That's
it
what
becomes
they treat it like.
right. It becomes a contract. And what did this contracted unit develop? What products did it get? What assets did it amass? And how can we equitably divide it between the two of them?
Got it. Yeah. Okay. 2, how is credit card debt split? And what about other bills such as loans?
Well, once again, we talked about credit cards a minute ago. That is part of the marital estate, the marital assets. I'm going to use the word estate. That's what we call it, because everything counts. So when you think about what most marriages have a house. And often, if you live in Johnson County, the equity in the house, given that houses have gone up a couple $100,000 in the last 3 years and just passive increases because there's not enough houses in Johnson County because we have a supply and demand problem. We have way more demand than we do supply, which is driving the price of houses up. Then you end up, so that is often the number one asset in a marriage. Other assets that you see in the marriage that are actually to the positive: 401k, retirement accounts, 529 college savings accounts for the children, stocks, bonds, mutual funds that you may earn. All of these are assets of the marriage, as well as vehicles if they're paid for. The question is, most of the time, if your vehicle is not paid for, the vast majority of people owe more on their vehicle than it's worth. But if you have a paid for vehicle, or a vehicle is almost paid for, the difference in what you owe and what it's worth can be an asset that would be considered to be divided. And then, of course, there are the debts, which is often credit card debt, short-term consumer debts, car loans, the mortgage. Back in the day, we used to have houses that were worth, where you owed more than what they were worth. That is an extremely rare occurrence now in Johnston County. Almost all houses are, unless you just bought it in the last 6 months, you're not going to owe more than it's worth. You know what I'm saying? So, but, and then you have these credit card debts. And so they get put in the pot. And it's not that we're going to divide everything exactly 50-50, but we're going to put things in your column. And it's going to be debits and credits accounting 101. We're going to put some things in your column, Raina. We're going to put some things in my column. We're going to add up what I have in my column, and maybe I'm getting a house, and that's $100,000, and maybe I got a 401k, and that's $50,000, and maybe I got to pay for a car, and that's $20,000. So I'm at 170 to the good there, and I'm going to take, a $25,000 credit card bill and a $10,000 car loan, and so now I'm going to be take 35 off of by 175, and I'm going to be at 135. So at this point, there's 135 to the good in Jonathan's column. Then we got to figure out what would make Raina have 135 to the good in her column. So the first thing you have to do in this is, and the hard part for attorneys is trying to figure out what the assets are and what are they worth. What is the house worth? What is the 401k worth? What is the car worth? And that's where Kelly Blue Book come in, and house appraisers and all of those things, to figure out, and then the debts, like what other credit card debts, have people pay down those debts after they separated? Because if you pay down the credit card debt after you separated, you get credit for that in the divorce. And so if your goal is, if you're, an attorney like us trying to figure out what a fair deal would be, is you got to figure out what the total assets and the total debts are to get the net worth of the marriage, which is after everything's paid and sold off, what would the marriage have? Sometimes that's to the positive, oftentimes that's to the negative. And then you have to divide that positive or that negative in half and determine how is each person going to get their half of the net. And that net may be positive, that net may be negative. And that's sort of how it goes. So the credit cards are just one of the things in the marital assets that have to be divided.
So would you say they're generally split equally or equitably?
The law says equitably, and equitably is not always equally. There are 16 or 17 different things under the law that would allow the court to divide the assets unequally.
Yeah.
In my experience, the court does everything in its power to divide it as equally as possible. You know what I mean? And it really does try to make it equal if it can. So we approach every case of trying to figure out how to make it equal. And, every once in a while it can't be because of the nature of the assets. Maybe one of the things in the statute applies, particularly if one side laid waste to a lot of the assets,
that
spent
happens.
spent a touch of money on drugs or alcohol or other women. I mean, it does happen. And well, really, and artificially lowered the net assets because the money was not spent for the good of the marriage. It was feeding an addiction, stuff like that.
Yeah.
But in the vast majority of cases, we're just trying to figure out what are the assets? What are the debts? What is the net worth of this marital unit? And how can we divide it equally?
Okay, so you said, I know you touched on this, the IRA and the 401k can be split as part of the marital assets. What about health savings accounts?
Health savings accounts, really, we don't normally split those. Oftentimes, there's not that much money in them. Most people are putting a few $100s in them, and it's not a serious enough asset to count. Normally, what we'll say is, while this amount of money, whatever it is, I've never seen an HSA with more than about $1,500. I'm sure people have them, but that's just not what we've seen a lot of. We'll say, okay, the marriage is going to use the HSA until it's gone. And so we're going to say, okay, there's $1,500, $2,000, and the wife and the children, if it's in the husband's name, will be able to continue to use it as they have used it until it has gone to zero. And then any future contributions after the set date of separation, if it belongs to the husband, that will be the husband's money to do with as he sees fit. Because if it's earned after the date of separation, it's not part of the marital assets.
Got it.
So that's what we normally do with HSAs. We say, okay, most of them don't have a ton of money. We'll say we're going to continue to use it. And when this amount of money is gone, then it's gone. And it may still have money because the husband may continue to contribute to it after the date of separation with each paycheck, like you contribute to a 401k, but the wife would not be entitled to that.
Got it. So, and just to be clear, the date of separation, not the date of divorce, or do you mean
Right. The assets in North Carolina are divided per the date of separation, not the date of divorce. But certain assets are divided on the date they are divided. So if a house or 401k or whatever continues to go up in value, you look at what the value is when you're actually dividing it because your interest was set in the marriage. And until you're paid on your interest, it's still accruing.
Got it.
And back during 2008, 2009, 2010, when all this stuff was going in the wrong direction during that financial crisis, we had some pretty bad conversations with people. We're very fortunate now, particularly with the sheer increase in house values in this area.
Astronomical.
It's really changed the game as to what we're doing here. And, if you own a house, it's now rare that we're looking at a negative estate when we used to be looking at that all the time.
Got it. Okay. What should people do to prepare financially for divorce?
The first thing I would do if I thought my marriage was in trouble or it was not going well is I would find out what I've got. So many people come in here and they do not know what their assets are. They don't know what their debts are. I am stunned, Raina, at the number of people who come in here and cannot tell me what their spouse earns.
Really?
It is surprising to me. And maybe that's why the marriage isn't working out because they're not communicating. So I think the first thing I would do is if I did not know what my house was worth or what I owed on my house, I would find out. I would get the mortgage statement. I would go to Zillow, put my address in and get a broad idea of what my house is worth. And I would subtract what I owe on my house from what Zillow says I might be able to get, throw in a 6% realtor fee, and that'll give you an idea of what the net value of the house is. I would do the same thing for my cars. I would find as many 401k, IRA, Edward Jones, Scott trade statements as I could find in my house to start. And I would make a spreadsheet of all of the assets if you don't know what they are and how they are structured. I would start putting together the account numbers and I would look at the debts, including the mortgage statement. I would look at the car, what's left on the car loans. I would look at the credit cards, what's left on the credit cards. How many credit cards are they? Are they primarily in my spouse's name or are they in my name? What's being auto charged these credit cards? Are these credit cards being paid every month? The first thing you need to do financially, if you think your marriage is in trouble and you're about to separate, is figure out what do you have or don't you have. That's the first thing. The second thing you've got to do is you got to make a budget. You have to make a budget as to where you're staying. So you look at it and say, okay, I'm going to stay in this house and my spouse is going to leave. Okay, the mortgage doesn't change because the spouse leaves. The water bill doesn't change because the spouse leaves. The property taxes don't change because the spouse leaves. The power bill doesn't change because the spouse leaves. The yard needing to be mowed, whether you mow it or pay for it, doesn't change if the spouse leaves. The trash bill doesn't change. Really, none of the bills, other than possibly the food, really changes when a spouse leaves.
And car insurance.
And car insurance, which is, we're talking $100 a month. So if you don't know what your household budget is and what you're trying to live on right now, you need to figure that out. And the easiest way is, there are all these websites and apps out there. Dave Ramsey has an app, your bank account, all your bank statements will show you what you're spending money on. If you're mainly using a debit card, not a credit card, it'll characterize it for you. It'll go back 12 months for you.
Yep.
And so you can get some averages because, power goes up and down and water goes up and down and that kind of stuff. The second thing I would do is I would figure out what the budget is if I stay where I am. What is it going to cost? And what do I make? And what would it take contributions from the spouse who's left for me to stay where I'm at the current budget? Or you need to look, if you think you're leaving, you need to make a budget where you're going, which includes rent, power, water, cell phone, food, car insurance, health insurance, haircuts, whatever, right? And so that you need a budget there. And I can assure you that in 95% of the separations that we deal with in Johnson County, there is not enough money to go around.
There never is.
Whether it's Wade, Johnson, Hart, it doesn't matter. There just isn't, right? Most people live up to their means or above their means. The Vice President, Kamala Harris, a couple of months ago stated, she cited a study, and I think she misspoke, but the point she was trying to make was right, which is 54% of Americans could not pay for a $400 unexpected car repair bill without going to a credit card. So I've been there. I'm not passing judgment, but I've been there at some point in the past.
I think we all have.
Right. Early in my career, I have been there. So I'm saying that means that when you separate, the odds are there's not enough money to go around. It costs at least 40% more. And with inflation, more like 50 or 60% more to live apart than together. And so if this unit together has $6,000 a month net, that's what it's bringing home after taxes, and it's spending $6,000 a month to live in a single house, and now one of those spouses has to go live somewhere else, then there's not going to be any money coming back to the spouse that stays other than child support. In that scenario, I doubt there's going to be a lot of alimony because the spouse who leaves has to go live. Well, it's going to cost them at least $3,000 or $4,000 to go live somewhere else. A one-bedroom apartment in Johnson County now, $1,500, $1,600, $1,700. I mean, it's crazy.
I know.
I mean, and you can't find a house to rent.
Oh,
And if
no.
you can, they're a couple $1,000s. And even mobile homes, if you can find one of those to rent, are $1,200 now. So, that's the thing. So, that.
If you have kids, you don't necessarily want to live with roommates. You don't know these people.
Right. No, that's exactly right. That could be dangerous. So that's the thing. So it's all about what do you have in budgeting and figuring out, okay, maybe I can't stay in this house because I cannot take the $100,000 in equity that's in this house and go to Food Line with it and buy groceries or make my car payment, and so maybe you need to go find something to rent. Maybe you need to sell the house and take that cash, put it in your pocket. I mean, that's up for each individual decision. But, I also think it would probably be good. And I don't care how much money you have. Go talk to a financial planner. Go talk to somebody. We had Chris Key on Aspect Financial the other, a few podcasts ago. Go talk to somebody at Edward Jones. There's an Edward Jones agent in every corner in Johnson County. Go talk to somebody who's a professional at budgeting and finance and say, this is what I got. Can you help me? And they will be glad to help you.
Yeah. All right. And so what should you do if you suspect your soon-to-be ex-spouse is hiding money or assets? How do you handle that?
I think you should look at all of your finances, particularly where the paycheck is going. I think you need to study the bank accounts. If you have joint bank accounts, if you have access to the credit cards, mainly where is that spouse's paycheck going? How much is that spouse making? Is this money coming in to this Wells Fargo account, but it's being transferred to an account somewhere else?
Yeah.
And I don't have access to that, So just try to figure out where you think it might be going and how it might be structured. If you only have separate bank accounts, which a lot of marriages have, then you're not going to be able to get access to that. And what I would do is I would go and contact a local attorney, come call us at the Breeden Law Office, and we can start to try to figure out where this money might be. Once you start a lawsuit, you can start sending subpoenas, you can get restraining orders. There's a lot of things to try to get, hire private eyes. We can hire forensic accountants. We have a lot of assets. We have a lot of community resources at our fingertips in our phones to help sort of try to figure this out if you don't have access to the stuff to be able to see. But if it's a joint account, you can often just go read the bank statements and you can start to see stuff that just doesn't add up.
Yeah.
And ask questions. Ask the spouse. Say, why is this money being transferred? Where did it go? What's in that account? Why did you spend this money on whatever? And try to start to get some answers.
Yeah. And I know you can also set up rules for paychecks for you, like some goes into this account, some goes into that account. So
Correct.
maybe if you know how much your spouse makes, but the paycheck that's coming into the joint account isn't as much as it should be,
Right.
where's the rest
Right.
of that money going?
Right. Well, and what I also tell spouses that come in and say, I don't know what he makes, I'm like, did you file a joint tax return? Most married couples do. It's very advantageous for married couples to file tax returns. And I'm like, do you know where your tax return is? Contact your CPA or whoever did the tax return, H&R Block,
Or
whoever.
you can use the
Get
credit
a
online.
copy of the tax return.
Yeah.
It will have the W-2 with it, and that'll tell you how much he made or she made.
Yeah, and if I know I use H&R Block, and I can look all of that up online. I can look like for the last 4 or 5 years.
Right. So, that's the other thing, is you can write the IRS and ask for a copy of your tax return and maybe ask for the last few years of your tax return
Yeah.
so that you can see at least what they're reporting to the government that they made. Now, if they're self-employed and they have cash or, there's some stuff like that, that might be a little more complicated,
Yeah.
but most people, it's on the tax return.
Yeah.
Have family law questions? Need guidance to navigate legal challenges? The compassionate team at Breeden Law Office is here to help. Visit us at www.breedenfirm.com for practical advice, resources, or to book a consultation. Remember, when life gets messy, you don't have to face it alone.
All right, last question. And you kind of touched on this earlier, but so if your spouse used marital funds and or accounts to fund an extramarital affair, do you get some of that money back in the divorce? How does that work?
You should. You may not get it back. It should go as a credit, right, in the column, right? So if this spouse spent $5,000 on a credit card on the affair, and you can show that it was for hotel rooms and
Flights.
flowers and stuff like that, flights that didn't have anything to do with work, and they're funding an affair, and it's often on a credit card that you don't have access to, but we send a subpoena, we get the access. And now that spouse is saying, well, this credit card that I owe $10,000 on is a marital credit card. And you go back and you study these credit card statements and you see these charges that clearly were for an affair. Like the flowers didn't come to you, Raina.
Yeah.
You didn't stay in that hotel in Tahoe.
I didn't go to Aruba.
You didn't go to Aruba. Right. And, he didn't have work in Aruba and it's on a personal credit card. He didn't get reimbursed. Right. So, these things happen. What we then say is, instead of $10,000, that credit card in this distribution is only going to be $5,000 because only $5,000 of it was for the marriage. The other $5,000 was for somebody else. I had one a few years ago where they had a home equity line of credit and it had about $15,000 on it. And the wife was planning on leaving the husband and the husband had absolutely no idea he was about to get left. And so the wife maxed out that home equity line of credit by buying a $5,000 necklace for her mother, a diamond necklace for her mother, and 2 $5,000 CDs for their daughters. And it was done the week before she served him separation papers, and he was completely stunned. He came here, he was completely upset. He had no idea his marriage was about to be over. And we were able to go back and say, okay, that $15,000 that is on that line of credit is not marital.
It's not his.
Right. We're not,
responsibility.
right. It's not his responsibility. She could sell the diamond ring. She could cash in the CDs, but we took that $15,000 off because I think at that point, the home equity line of credit was 50 and they owed 100 on the house. So they were trying to keep the house saying, okay, well, it's 150. We're like, no, the house is only 135 when you put the two debts together because that 15 wasn't his doing. Correct. Was not his doing. And she clearly did it planning to separate because she did it the week before she gave him the paper. She'd already hired the lawyer. He had no idea his marriage was coming to an end. So you do see that, right? Like you see people that like, because a lot of times one side has been planning for the divorce for a long time and the other side gets blindsided. And that's unfortunate. And that person that's planning, that's when money starts getting moved around. They create a separate account, but look, even if they move the money to a separate account and if that money exists on the date of separation, it's still marital. It still gets divided in the assets. I don't care how it's titled. I mean, if you got $100,000 in a CD and it's only in your name on the date of separation, and I didn't know anything about it, but you have to disclose it in the divorce, I still get half of it, even though it's only in your name. I think a lot of people say, oh, it's in my name. My car's in my name. The house is only in my name. Well, not exactly. In a marriage situation in North Carolina, this is not a title state. This is was it gotten during the marriage? After you divorce, it's title. Or if you divorce and you didn't divide the property, then it's just who it's titled to at that point, and there's no longer a marital interest in it because you're divorced. So you've got to deal with the property before you get divorced. You got to wait a whole year of being separated. So we got plenty of time to try to deal with it. So call an attorney, get involved, try to work something out, but you got to deal with this property before you get divorced or it will become the title. And at least once a month, right? If somebody comes into this office and says, I'm divorced, what about the house? And I'm like, well, how's the house titled? Well, if it's titled in both names, you're now joint tenants. And if you're not living there, you could try to have it auctioned, to get your money out of it or try to force a sale. But if you would have dealt with it before you got divorced, then it would have been part of the total marital assets and the equity in it can be offset by some of the debts and stuff like that. It is rare, back to your original question about the credit cards, it is rare that we actually make one side pay the other side's credit card. Normally, that entire credit card debt, if the credit card is in your name, gets put in whoever's name is in his column, and it's offset by some other debt or asset in the other column. Every once in a while, you'll need to pay me $500 a month till the credit card is paid off. But normally, there are enough other assets and enough other debts that it's just an offset in this debits and credits worksheet that we make to try to make sure everybody gets half.
Got it. That's all I have.
All right. Well, anyway, that was a lot. We could probably do a separate podcast on each one of those questions. And we might do that as this podcast continues to roll along. So anyway, like we said earlier, if this is your first time seeing or hearing the Best of Johnson County podcast, we ask you to like, follow, subscribe it wherever you are. Check back every Monday for new episodes of the Best of Johnson County podcast. I'd like to thank Raina for coming on and helping us with this special edition episode of Ask Jonathan Breeden Anything. And so until next time, I'm your host, Jonathan Breeden.
That's the end of today's episode of Best of Johnston County, a show brought to you by the trusted team at Breeden Law Office. We thank you for joining us today, and we look forward to sharing more interesting facets of this community next week. Every story, every viewpoint adds another thread to the rich tapestry of Johnston County. If the legal aspects highlighted raise some questions, help is just around the corner at www.breedenfirm.com.